if you technically use it in a barter transaction, right, then technically you may owe tax on the appreciation at the time. Let's say you take your gold and you exchange it with somebody for goods and services. But how does the government know you made that exchange? I mean, the guy that you traded with isn't going to file some kind of form to tell them that he performed some service and you gave him some silver. There's going to be a big underground economy if we have hyperinflation. And so they're not going to be able to tax the underground economy. I mean, that's why it's underground, because nobody knows about the transactions. So if you're worried about all that stuff, physical gold and silver in your possession is the only way to go. Now, taxes, like one of the things I did, I got zero capital gains tax because I live in Puerto Rico. And I got an Act 22 decree. So that's another thing you can do. You can move to Puerto Rico like I did, and I sell the gold that I bought for, if I buy it today, I can buy it for, $1,500, whatever it is. If I sell it for $1 million, I don't owe a nickel. I don't owe a nickel to the Puerto Rican government, and I don't owe one to the U.S. government. So if you want the same deal that I got, it's open to everybody. Just move here. Let me see. Next question. Is the two $500 billion repos on a day that the Fed announced last inflationary? What do you think of Bill Ackman's idea of shutting down the U.S. for 30 days to get rid of the virus? Yes, I was watching this asinine statement that Bill Ackman made. But before I get to that, the $500 billion repos, yes, it's all debt monetization. When the Fed first started, when they first intervened in the repo market by buying up these bills, actually what they do in the repo market, and the reason that they came in to buy the bonds is because nobody else was buying them and interest rates were soaring. And so to continue to artificially suppress interest rates, to keep the air from coming out of the bubble, the Fed printed the money to buy the bonds and their balance sheet expanded. That's quantitative easing. At least that's what they labeled it when they did it in 2008. I just call it debt monetization the whole time. And then now they're buying all sorts of maturities, and they refuse to label it quantitative easing. They're embarrassed to call it quantitative easing, even though it's exactly what they did. But now they just announced they're not just buying obligations that are guaranteed by the government. When they did the QE the first time, 1, 2, and 3, they were buying treasuries and mortgage-backed securities that were guaranteed through the GSEs, the government-sponsored enterprises. Now, they just announced, and it's probably even illegal, but they announced it, they're buying or accepting as collateral, which is the same thing as they're printing money. In fact, we already have a bank bailout now, right? They're allowing the banks to bring their collateral to the Fed and get cash that they need, because otherwise they would all fail. All these big banks we bailed out that are now bigger now would all be failing. That's why the financials are collapsing. Anyway, I gotta stop this text from coming. These people from texting me because it's. Hold on, I'm gonna tell them. Stop texting. Hold on. Anyway, what was I saying? Yeah. So what the Federal Reserve is now doing is they're allowing the banks to deposit corporate bonds that are not guaranteed by the government and municipal bonds, right? Obligations of municipalities that are not guaranteed by the federal government, and even equities, common stock. I mean, that can go to zero. Companies that can go bankrupt. How is the Fed supposed to accept that as collateral? So we have just gone off the deep end now. But yes, this is all massive inflation, right? We are just printing all this money, and everybody thinks that the money is going to hold on to its value. Just like everybody, thought the Treasury bond market was a safe haven until it just blew up. People think a lot of things that aren't true. People are in for a rude awakening. Remember how surprised everybody was by the 2008 financial crisis? I wasn't surprised. I predicted it for years as people laughed at me because I understand the problem. The people who were surprised by the problem didn't understand it. The people who think the Fed fixed the problem that they didn't understand are wrong. I knew that they made the problem worse because I understood it. And I understand what's going to happen now. They don't. They're going to be in for a rude awakening when we have a currency crisis and a sovereign debt crisis. As far as Bill Ackman, who is obviously a very bright guy, he's been very successful in life, more successful than me, right? So, I mean, achieved a lot of financial success as a hedge fund manager. I've never really been in that except for my short experience shorting subprime, which we did on a small scale, was wildly successful. But that's the only time I ventured into the hedge fund world. But he's a smart guy. But what he said is completely nuts. We can't all take 30 days off. I mean, first of all, the idea that we're even going to cure the virus in 30 days. I mean, how do you know we all come out of hiding after 30 days and the virus is still here? There's no guarantee that if we just disappear for 30 days that the virus is going to be cured. So what if it's 60 days? What if it's a year? The whole thing is preposterous. But what Ackman doesn't understand is we can't afford a 1 month vacation. The entire country is going to stop working for a month and the federal government's going to give everybody money. One of these other guys on CNBC said, Andrew Ross Sorkin, who actually quoted me in his first book about the crash, because I was one of the few people he mentioned who saw the crisis coming. And I mentioned that, Lehman or one of the, that was going to go bankrupt. That even when other analysts were saying how solvent they were, I said they're going to fail. They're going to go bankrupt. All the people that are saying that the banks are in great shape now. It's not like 2008. Those are the same people that said the banks were in great shape in 2008. They only realized that they were in bad shape after they went bankrupt. It's not a coincidence that the financials are among the weakest stocks, other than the airlines and the cruise ships. The stocks that are sinking faster than the ocean liners are the financials, because this is another financial crisis. But if the government were to pay everybody's bills for 30 days, if the government were to loan everybody and every company money interest-free for 5 years, like Andrew or Sorkin wants, the dollar would collapse. We would have runaway inflation. The money doesn't have any value. What gives money value is the goods and services that we produce. But if nobody's producing goods and services, if all we're producing is money, we've produced nothing, and the money is worth nothing. This is the threat. This is the danger. They don't realize they're playing with fire here in destroying the dollar even sooner rather than later. Now, this was inevitable anyway, and it probably should have already happened a long time ago. But the fact that it's happening now, when the problems are so much bigger, it is going to be so much worse. The only way that this could work, right, where the Federal Reserve could print all this money and it wouldn't collapse, is if foreigners were willing to accept all these dollars, even though we just flooded the world with them, and they were going to keep sending us merchandise, right? All the imports from China were going to keep coming in exchange for dollars, even though we've just printed them by the tens of trillions. Well, the world is not that dumb. But even if they were that dumb, they're not going to do it, because the rest of the world is dealing with the same problem we are. So they don't have extra money to loan to us. They don't have surplus products to ship to us. They need the stuff themselves, right? So we're not going to get any of that stuff. We're just going to have all this money. See, we're used to printing money and sending it abroad, and then foreigners take that money and buy our treasuries. Well, when that process stops, we print money and it stays right here. Well, what are we going to do with it? See, we're used to money going out and goods coming back. Now we're going to have no goods coming in, and we're going to be up to our eyeballs in money, right? So it's inflation. And so what these guys are saying just shows you how clueless they are, how clueless Ackman is and Sorkin and everybody else who thinks that there's no limit to how much money that we could print and that we're not going to do any damage. We're going to do more damage with the printing press than the coronavirus is going to do, by getting us sick. And more people will probably end up dying because we destroy the economy, destroy the money, and we have mass, civil unrest and riots and looting. I mean, who knows what we're about to unleash? This is going to be a man-made economic catastrophe, right? And you don't have to blame Mother Nature for this. This is man-made. We did this, the Fed, the government. It's not a natural thing. The one thing that makes sense to me, right, as far as what we do with this, and I guess I've heard about this in the UK, this health industry or death, right? And of course, we already know when you're 80 and 90, that's true with everything. I mean, you get pneumonia when you're in your 80s or 90s.